With record-breaking house prices, are we going to start to see a policy response coming? Or are the politicians too distracted with other things to come up with some sort of working solution towards the this rampaging market of ours? Average home price hits a record $716,828. Is another policy response coming? Canada's average home price rose 31.6%, or $172,361 over the last 12 months to yet another record-setting high in March. The average national price now stands at $716,828, according to data from the Canadian Real Estate Association, CREA. Even without the high price markets of the Greater Toronto Area and Vancouver areas, the average price still stands at $556,828, which is up 34.3% from last year. At the same time, housing inventories continue to tighten with a remarkable 1.7 months of inventory available, the lowest reading on record. This is the amount of time it would take to liquidate current inventories at today's rate of sales. There was a glimmer of hope, however, that the housing supply that's been locked up since the start of the pandemic may finally be starting to free up in the form of heightened activity. March saw 76,259 home sales, an annual gain of 76.2%, and the highest level of activity of any month in history, Korea said. The real issue is not the strength of the housing market, but imbalance, said Cliff Stevenson, chair of Korea. That demand has been around for months, but the shortages in supply we have across so much of Canada, a lot of that demand has been pressuring prices. So the big rebound in new supply to start the spring market is the relief valve we need the most to get the demand playing out more of the sales side of of things and less on the price side. Yeah, so hopefully that could be the case. I mean, if we start to see a lot more supply come online, then yeah, we're going to see a more of a flattening and the increase in prices theoretically, right? Especially if they're mostly in these areas that are in demand, right? So more competition in prices, more options that are available. Now, the interesting thing is because obviously housing is not just it's not just it's not a commodity, right? Not every house is not the same. You have some homes that are in better locations. You have some homes that are just built better. They're in better shape than others. So you're not going to expect to see all the pricing being uniform across the whole housing market. So depending on where these new units are coming online, will also depend on how to what degree the impact would be on the pricing. I mean, if we're seeing more houses coming online in the median or above average, then we're not necessarily going to see a change to the average price, right? So even if a lot of homes are coming on the market at above average rates, anyways, above average prices, then we're just going to see it fall towards the mean, most likely, right? We're not necessarily going to see any sort of dramatic change in the pricing, but that could also send some sort of ripple outwards because if a premium house, if the cost of a premium house goes down, then all the other houses will have to change their pricing in accordance with that, right? Because if you can get a premium house at a discount, then how can you sell your sub premium house at full price? So here's a look. Yeah. So what I thought was really interesting though is just taking a look at what some of the major markets across Canada have experienced over the last 12 months, right? So yeah. So here's a look at some more regional housing market results for March. I believe these are year to date numbers because we're not expecting to see like a 41% increase in 1 month. So yeah, I mean, take a look at. Wait, they don't have Toronto specific here. They just have the GTA, I think. Yeah, Greater Montreal area, Greater Vancouver area. I mean, 22%. Halifax, Dartmouth. Wow, okay. And they just have Ontario as a whole, and then they broke it down, and then they have Ottawa separately. Yeah, so I mean, yeah, this was crazy because I think this there was like a $100,000 gain to their average in the Barrie area in like 3 months. Just absolute insanity, right? Your income would have had to grown by like I think it was like about around 20,000 or so just to keep up with that in such a short period of time, right? So it makes it very unaffordable for most people. So are more policy responses on the way? Last week, the Office of the Superintendent of Financial Institutions, or OSFI, unveiled proposed changes to its uninsured mortgage stress test, which would raise the current minimum qualifying rate from 4.79 to 5.25%. If it comes into effect June 1st, as proposed, the measure is estimated to reduce the purchasing power by about approximately 4%. I mean, is that going to be enough to make a significant difference? Probably not. So together, these measures, I mean, also Department of Finance is looking at creating stricter measures around insured mortgages. So as it mentions here, is typically a mortgage with less than 20% down. So we're going to take a look at introducing potentially more measures around insured and uninsured mortgages to slightly slow down the market. Um, I mean, what is a slight slowdown when you have a 33% increase in 1 year, 34% increase in 12 months? What does a slowdown look like? With 4% decrease in purchasing power. I don't know. Is that going to be significant enough to really make a difference for the folks that are trying to get into the market? We shall see. There's only so much they can do, I suppose, right? Because they don't. The whole idea is not to crash the market; is to slowly let some of the air out, right? So that we don't see any sort of abrupt halt in the future. So yeah, so together these measures would directly dial down the demand by a few degrees. Robert Hogue of RBC Economics. Hogue added that a supply response is likely to fall short in the near term, but that some cooling of demand needs to take place to help moderate price growth. A gradual rise in longer term interest rates, deteriorating affordability, and the resumption of office work will eventually restrain demand, but it's difficult to know when that will be. But economists at Scotia Bank still see further price gains in the months ahead, given the sales to new listing ratio of 80.5% is well above its long-term average, not to mention the additional housing demand expected from increased immigration when border restrictions are lifted. They add there could be a small rush of buyers during the spring market to qualify for a mortgage before mortgage rates rise further ahead of OSFI's restrictor stress test. Yeah, so that's basically it. So we're most likely going to continue to see policy change announcements because this is becoming a big issue, and we just have to hope that it's not going to make a massive change to the prices in. Well, I mean, it's difficult to say, right? When I say hope, we don't see a massive change because if we say some people are hoping for a crash, but you don't really want to crash. You think you want to crash. You think you want to be able to access the market at a discount, which and I get you probably do, but there's a knock-on effect that comes with that, right? So the best way we can try to do this is to moderately cool off the increasing in the housing prices and do something to help increase the average incomes of the Canadians trying to purchase these homes. That's really the only way to do this. We really need to focus on what can we do to increase the wage growth in the country so that I can keep up with the this price increases. Anyways, that's everything from me today. Let me know what you think. Thoughts in the comments section, and feel free to like, share, and subscribe if you found this at all entertaining or interesting. Thanks for your time, and you have a great day.